Joining me now is David Struzeski, CEO of Sound Planning Group. David, welcome to the show.
Thanks so much for having me.
So a lot of eyes have been on the Fed. Can you talk about their position that they're in right now?
Sure. I mean, they're kind of in a sticky place. This is a holding kind of a pattern. They're very data dependent. They're not moving without confirmation, and they've kind of got this one move that even when they see kind of rates come in maybe not as good, they're like, yeah, it's just one data set. And so we're sort of in this in-between place. And ultimately, I think it's kind of like the Arthur Burns moment, if we remember, like in the late 70s, early 80s, where he cut rates too early, and it reignited inflation, and it took Paul Volcker to come in to actually really get the Fed rate high enough in order to get inflation all the way down. I don't know exactly that we're in the same pattern as before, but it's a difficult place for Powell to be right now, because if he cuts, it will definitely ignite inflation in the stock market and a lot of different places. But if he doesn't cut, we risk losing the consumer right now, who's having a very difficult time affording life, affording their health care and their housing, and we're just having a lot of challenges.
When they're weighing a decision like this, what types of considerations are they making when they're deciding like whether or not to make an actual rate cut?
Well, Powell has a dual mandate. He's got to keep interest rates steady, and he's got to keep employment just right. So I think he's going to be more concerned about inflation here in the future, although we see some negative inflation coming with probably housing coming down a little bit. So they call that minus inflation, although it hurts us. So it kind of seems like the same type of inflation. But I think that we've got some challenges showing up in unemployment right now as well. We also have a lot of new businesses that are filing for bankruptcy. And so I think that those are going to be some of the factors that he needs to be paying attention to, so we don't let this thing get too out of control.
What do you foresee happening at the Fed's next two meetings in September and October? Highly anticipated.
Yeah, I think that you're looking at probably a 25% basis cut. Like, he's just going to do the minimal thing until something actually breaks. And I say that because Powell is actually more of a dove than a hawk. He is willing to go all in. He's willing to drop rates. I think that you're going to probably see 1% here probably come off by the end of the year, but it'll likely be as a result of some challenges in financials, maybe in banks, maybe with certain companies and layoffs going on.
And we're at the tail end of earnings seasons. What have been your biggest takeaways so far?
Biggest takeaway is that AI still leads. The rest of the world, specifically consumer-based companies, are having a harder time. Why? If 70% of our GDP is the consumer, I'm also getting really concerned by this, because the consumer doesn't have as much cash right now. They're not spending quite as much anymore, given the high rate of groceries and gasoline right now in our society.
All right, and how should investors be viewing the current state of the economy?
The current state of the economy is kind of an interesting one. We've got some really positive things that we can say on one side, and we've got some challenges on the other. So there's a few things that can go wrong. I'm cautiously optimistic, though, about the future. And I think one thing that consumers can recognize right now is that we had this passing of the Tax Cuts and Jobs Act 2.0, big, beautiful bill. I like to call it TCJA 2.0. Why is that important? This is the single greatest opportunity in anybody's adult lifetime to reduce or eliminate taxes on their retirement dollars. What I'm talking about is Roth conversions and contributions. If we get a big pullback this year, it's a great time to take stocks out of one share and put them from an IRA to a Roth. Pay taxes on it today while it's down. If you believe it's going to grow back up, it's a great idea. There's 101 different withdrawal strategies, and this is the moment right now to be capitalizing on these ideas.
The market's been pretty resilient lately. Do you see this continuing to the end of the year?
Okay, I think that as we get into September and October, we're going to see some harder data show up. And so that's where I think that this could bring some challenges to the stock market, specifically even in AI chips. NVIDIA is so large, if they stumble here even at the end of the month, because maybe there's less CapEx spending on AI, then what ends up occurring is you're going to see a big percentage of the S&P 500 begin to drift down. So I think maybe the economy as a whole could do well, more like S&P equal weight, as opposed to a cap-weighted index, because we're just moving a little bit away from these big movers that have led so strong, and I think we're now shifting into a couple of other places in our economy.
How are you advising your clients given the current state of the economy?
Most of the families that we work with are nearing or entering retirement. So this is not a time to not have your anchors in place. If you want to swing for the fences, make sure that you've got some solid anchors. I am a little bit worried about bonds right now, and the fact that we could see downgrades or defaults, and that they may not be the anchors that we hoped that they were. So we're looking into some alternatives into that way. We're really getting selective in our process for the anchors of our portfolio. But hey, I'm really excited about AI. I'm really excited about technology. I'm excited about healthcare. I'm excited about mining mining. I'm excited about blockchain technology and how innovation right now can meet the real world and make things much more efficient, much more effective. But there's also maybe blockchain's the most confusing parts of computers and money and all combined in one, and maybe that's a little bit much for the real world right now too, so who knows?
You just mentioned AI. You know, it's really like most of what we report on here at the New York
Sure.
Stock Exchange. Where do you see this going in like the next like year or so?
Okay, AI is something that toothpaste is out of the tube. We are going to see massive changes. The big things that could really disrupt right now, robots. If you can get a robot at home that can be doing your dishes, mowing your lawn, doing whatever, maybe even making money for you, like that would be a game changer for the economy and also could threaten a lot of jobs. And so, you know, that's one thing. But we are going to see real world applications of AI. It's got to make your life simpler and not just do cool tricks and, you know, help you to write a little bit more efficiently. And so as we see that adoption, I think that you're going to truly see the world change. And I believe that America is going to lead in that revolution.
Any more under the radar storylines that you think investors should be keeping mind of?
I do. The Japanese carry trade is something that is like, what did you just say? In Japan, all you had to have was cheap money. And what they've done is they were giving loans at like 0.4, and ultimately, you know, they were buying the S&P 500 with those loans. What's happening right now is a big unwind because they were having to ratchet up their bonds, and so it kind of works like a seesaw. When that goes up, the value goes down, and so the values of these Japanese carry trades are going down. And if I can be honest, this could be the catalyst to something more global or worldwide having challenges. But I hope it does not, and I hope that we can get this thing figured out.
David Trzaski, CEO of Sound Planning Group, thank you so much for joining us at the New York Stock Exchange.
Pleasure's mine. Thank you.
Coming up, although ESPN